Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing PayPal stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 65 billion market cap. They're trading at $60 a share and they have 1.1 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. Really consistent numbers from 2020 to 2022, around 5 billion. It did drop in the trailing 12 months to 3.2 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was steady in 2020 and 2021, dropping in 2022, but it's back up to 3.8 billion in the trailing 12 months. Their revenue looks really good. It grows each year from 21.5 billion to over 29 billion. Their revenue is the fees they charge per transaction. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 101 billion. We discounted those numbers back to today's and weighted average cost of capital. We get a value of the company of $88 billion. We divide that by 1.1 billion shares. And we get a calculated stock price of $82. They're trading at $60, so they're trading at a 27% discount. It's a buy according to the model. So the stock used to be so much higher a few years ago. It has come down a lot. And if you own this stock, I'm sure you're wondering, when is it going to rebound? I wish I could give you a clear and definitive answer, but we have to just wait. There are 39 companies in the same industry as PayPal, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. Most companies in this industry don't spend much in CapEx. They only spend 600 million. The Japanese company Oryx spends over 7 billion. I wonder why it's so high. PayPal has a good debt to equity ratio, a lot better than the median and average. They do not pay a dividend, but a lot of companies in this industry do pay a dividend. Look at Blue Owl, a 10% dividend. I know they're located in New York City. They do asset management. They generate a good amount of free cash flow. Capital One is the most at over 20 billion. Visa is close to 20 billion. PayPal ranks 4th in market cap. Visa and MasterCard are 1 and 2 by a pretty strong amount. Amex is number 3. Their price to book, PE, and price to free cash flow are worse than the median and average. Price to sales is between the median and average. They generate a good amount of revenue, 29 billion. Amex is number 1 at 54 billion, a lot more than Visa and MasterCard. Almost as much as Visa and MasterCard combined. And PayPal is still growing. Their 5-year annual revenue growth rate is 14%. Look at Blue Owl, 37%. Let's take a look at their third quarter 10Q. Let's start off with their income statement. On the very top is their revenue, 7.4 billion. That's for the third quarter of 2023. For the third quarter of 2022, 6.8 billion. Let's see if they give a breakdown of the 7.4 billion so we know what it is. Of the 7.4 billion, 4.3 billion is in the US. Other countries, 3.2 billion. Of the 7.4 billion of revenue, 6.7 billion is transaction fees. So when people use PayPal to transfer money, PayPal takes a fee, and that's where a majority of their revenue is. They do make a small amount of revenue, 760 million, about 11% of their revenue from value-added services. I think they provide loans to small businesses and other services. They talk about it right here, revenue from value-added services. This is revenue from partnerships, referral fees, subscription fees, gateway fees, and other services we provide to our merchants and consumers. And I mentioned loans to small businesses. They talk about it right here. We also earn revenues from interest and fees earned on our portfolio of loans receivable and interest earned on certain assets underlying customer balances. This income statement gives percentages. So they did increase their revenue 8% when you compare 6.8 billion to 7.4 billion. Operating expenses went up 9%. That means they're less profitable. Their margins are smaller. Although when you look at operating margin, it's the same, 16%. But if you brought it out another decimal, this will be something like 16.1%, and this will be 15.8%. I don't know the exact numbers, but this should be higher, since their operating expenses went up more than their revenue. Let's go back to the full income statement. Let's look at their operating expenses. Transaction expenses went up from 3 billion to 3.6 billion. You would expect transaction expenses to go up since revenue went up, but it went up a lot more than revenue did. It grew 600 million, and revenue also grew 600 million. But as a percent, the expense went up a lot more, because 600 million over 3 billion is a much higher percentage than 600 million over 6.8 billion. Their credit losses also went up a little bit. Customer support went down a little bit, about $500 million. Sales and marketing went down, 440 million. Technology development went down, 730 million. And G&A went up to $500 million. So total expenses, 6.2 billion compared to 5.7 billion last year. Operating income, a little higher this year, 1.2 billion compared to 1.1 billion last year. And they had a big positive in other income of 460 million. So they did better in net income last year, 1.3 billion compared to 1 billion this year. So their EPS, earnings per share, is 93 cents. Last year, $1.15. That's because of lower net income. They do have less shares outstanding this year, 1.1 billion, compared to 1.15 billion last year. But their EPS is still down because their net income went down a lot compared to last year. Let's take a look at the balance sheet. Current assets are 57 billion. Current liabilities are 43 billion, so the current ratio is above 1. That's good. 6.8 billion of cash at the end of 2022, 7.8 billion. 4.7 billion of short-term investments. Here's a breakdown of the 4.7 billion. $500 million of time deposits. If you put money into a savings account, that's not a time deposit. If you put money into a 6-month CD, that is a time deposit because you cannot get the funds until 6 months. Then 4.2 billion of available for sale debt securities. And they do give a breakdown of the 4.2 billion. 570 million of US government securities, 350 million of foreign securities, corporate debt 1.1 billion, asset-backed securities 600 million, and commercial paper 1.6 billion. All pretty safe investments. A bulk of their assets are funds receivable and customer accounts. This is not their money. These are the transactions between customers. That's 35 billion. You'll see a similar amount in funds payable, 38 billion. That's the other side of the transaction. Lots of goodwill, 11 billion of goodwill. They acquired Venmo. That's probably part of their goodwill. They have $500 million of intangible assets. Here is a breakdown of the intangible assets. 400 million of customer lists. So when they acquire another company, that company's customers are an intangible asset. Marketing, 38 million. Developed technology, 20 million. And then other assets, 2.9 billion. So total assets, 76 billion, a little lower than last year of 78 billion. They have 57 billion of liabilities, 10.6 billion of long-term debt. And let's look at the equity section. Equity, 19.7 billion, is assets, 76 billion, minus liabilities, 57 billion. That's the value of the company according to the balance sheet, the book value of the company. And they bought back 20.5 billion of their own stock. They buy back lots of stock. When a company buys back their own stock, that decreases the shares outstanding and makes your shares more valuable. They raised 19 billion from selling their business. They profited 22 billion from running their business. Let's take a look at the statement of cash flows. The first section is operating cash flow. This is for the trailing 9 months, first 3 quarters of 2023. To calculate operating cash flow, you start with your net income, 2.8 billion. Then we add or subtract the non-cash items on the income statement. We adjust for changes in working capital. So their operating cash flow is 2.2 billion. That's about half of last year, 4.2 billion. It's a little more challenging looking at a company like this because they operate somewhat similar to a bank or a credit card company. So they issued 5.7 billion of loans. So that's a cash outflow. But over time, those customers will pay back those loans. When they do, it'll be a cash inflow. It's more of a timing thing. So you have to consider these types of things when looking at their financials. So their operating cash flow would be much higher if they didn't provide these loans. Let's look at their investing section. They spent about $500 million in PP&E. And lots of companies invest in corporate bonds, treasury bonds, commercial paper, different types of assets instead of just sitting on cash. So they earn a little interest on their investments. That's what this is, the purchase of loans, the proceeds of loans. These are just investments. That's different than these loans up here. These loans they're actually giving to customers and servicing the loans. So there's much more risk on these loans than these loans down here. They also show other investments, purchase of investments of $15 billion, maturity of investments of $16 billion. Let's look at the financing section. They purchased $4.4 billion of treasury stock, a lot more than last year of $3.2 billion. Let's take a look at PayPal stock price historically. It goes back to 2015. That's after they acquired Venmo. They acquired Venmo in 2013. You can see the stock price the first few months is getting close to where it is right now. 2015 and 16 were fairly flat. 2017 is where it started increasing, and then it just blew up in 2020. It was over $300 a share. These are monthly candlestick charts. So you can see this month, February 2021, it was a green month. It opened at 238, it closed at 259. But you could see this wick, it got really high, up to 309. So there was a ton of buying activity. But the bulls did push the price down because it was really high, its highest point ever, 309. And the bulls brought it down to the 250s. So when something like this happens, you know the bulls are probably in control. And they were. The following month, the bulls took over. It opened at 269 and it closed at 242. And it did get pretty low. It got as low as 223. Then a bullish month, a bearish month, a really bullish month, a bearish month, a bullish month. And then after August 2021, the bears just took over. They crushed the stock the next few months, pushing it below $100. And I think it touched $50 a few months ago. It's a really tough industry, lots of competition. I'm not too sure about this stock. I'd probably stay away personally, but if you bought it, I could be convinced it's a good buy. But personally, I'm probably going to just stay away. If you're super bullish on this stock, you're probably thinking it's a no-brainer. It's so obvious it's a buy right now because it was over $300 at one point. And I wouldn't disagree with you. There's just so much competition in this space. And their competition, Visa, American Express, MasterCard, have been around a really long time and are much bigger. I know they're little different companies, but they do similar things as PayPal does. The original name of this company was Confinity, and it was started by Peter Thiel and a couple other people. And then Peter Thiel and his company merged with X.com, a company started by Elon Musk, I think in 1999 or 2000. Then they changed the name to PayPal. Elon Musk and Peter Thiel, I don't think got along well. They gave Elon the boot, and Peter Thiel took over as CEO and took the company public, and then merged with eBay. Here's their revenue since 2016. It looks really good, $10.7 billion, and it goes up every single year, $27 billion in 2022. Gross profit also looks really good. It grows each year from $5.5 billion up to $13 billion. Operating income looks more volatile because it jumped up so much in 2021. This is due to a large gain. So if you strip out that gain, it would look a lot smoother. I think the gain was $1.1 billion. But even so, their operating income isn't much larger in 2022 compared to 2020. And their revenue went up quite a bit from those two time frames. And you could see they decreased their shares each year from 1.2 billion to 1.1 billion. Not a big decrease, but at least it's going down. This is their market cap. It grew nicely from 2016 to 2018, then blew up, more than doubled from 2018 to 2019. Then it came down in 2020, crashed in 2021, and it's down even more in 2022. Let's take a look at PayPal on Simply Wall Street. Its last price $60, 65 billion market cap, down 2% in the past week, down 21% in the past year. Let's see what they say about the company. PayPal operates a technology platform that enables digital payments on behalf of merchants and consumers worldwide. They provide payment solutions under the PayPal, PayPal Credit, Braintree, Venmo, Zoom, PayPal Zettle, Hyperwallet, PayPal Honey, and Paydy names. Its payment platform allows consumers to send and receive payments in 200 markets, also in 150 currencies, withdraw funds to their bank accounts in 56 currencies, and hold balances in their PayPal accounts in 25 currencies. Founded in 1998, headquartered in San Jose, California. Simply Wall Street's price is 111. They say the stock is 46% undervalued. 39 analysts priced this stock at 76. They also say the stock is undervalued. Their revenue back in 2013 was $6.7 billion. You can see each year their revenue increases. That's a really nice trend, up to $29 billion. The revenue forecast for 2024 is $32 billion, 2025 $35 billion, 2026 $38 billion. Here's their debt since 2013. It was real low. It was actually zero in 2016 and 17. Then they added more debt for acquisitions, even more in 2019, 2020, and now it's up to $10.6 billion currently. But their equity is always higher than their debt by a decent amount, so they have a good debt to equity ratio. This green line is their cash, which is pretty close to their debt. So they have enough cash to pay off all their debt if they wanted to. Only one insider buy and one insider sell in the past year. 71% of the company is held by institutions and 29% by the general public. Their biggest shareholder is Vanguard at 8.5%, then BlackRock, State Street, Norges, the Norwegian bank, 1.3%, Morgan Stanley, 1%, the Swiss company UBS, 0.8%, the British company Lincell, 0.5%. Their employee count has been going up over the years. It was 16,000 in 2014. It's currently 30,000. And the ticker trades in lots of places. The Nasdaq, Deutsche Börse, Xetra, Mexican Bolsa, London Stock Exchange, Swiss, EuroTLX, Wiener Börse, Lima Bolsa, Bulgaria, Kazakhstan, BATS Europe, Buenos Aires, the Sao Paulo Bolsa, and the NEO. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.